Good day, traders. Hope you guys are good and welcome to my channel. If you're new to this channel, in this channel, we'll talk about everything Forex. So if you're interested in Forex related type of content, this channel is the right channel for you. If you're a returning subscriber, welcome back. And I hope you enjoy today's video. Now, without wasting any time, we're going to get right into today's video. And this is a continuation from a previous video that I uploaded on leverage. So if you still haven't checked out that video, make sure that you check it out so that we can be on the same page. So I think in the last video, we spoke about how for you to be able to execute trades in the Forex market, you're going to need to borrow money from a broker, right? So that's what leverage is. So today we're getting into margin, right? So I took a screenshot of a trade that I took, and we're interested in this part of your MetaTrader, right? So you already know what balance is. You already know what equity is. Basically, equity is your balance plus or minus your profit or loss, right? And now we're getting into the margin. What I said in the other video was that it's impossible because of how small the movements are in Forex to make money from those small movements. And usually to make a large sum of profit, you're going to need like financial muscle in order for you to make profit from those small movements, right? So because of the lack of access to capital, what has then happened is brokers have given people access to credit in the form of leverage. So for every dollar that you have deposited in your account, they can give you control over a large sum of amount. It's like a multiplier effect. So for example, a broker might say, I'm giving you $50 for every dollar that you have in your account, which makes it a 1 to 50 leverage. This also means that if you have $100 in your account, you multiply that by 50, it gives you $5,000. So $100 gives you a controlling power of $5,000 in the market. That's just how Forex works. That's how we are able to make money with our trading, right? So then in the other video, I also hinted that there's a minimum amount of money that you need to put in for you to be able to open a trade. And that money is called margin. That amount of money is called margin. So that's how we define margin. Should I write it down? Let me just write it down. So that's the definition of margin. So why is margin necessary? Basically, the broker will require you to put in a certain amount of money as security for them. So they don't necessarily need your money, right? But think of it as a good faith deposit. So basically, that's what we're going to be talking about. So for example, you might have like $2,000 as your initial deposit, right? And then maybe when you signed up with a broker, you were given a 1:50 leverage. This means your total trading capital or the amount of money that you control in the market is 100K. I think it's 100K, right? So say, for example, you want to open a trade, right? And basically you want to buy 2 mini lots of Euro USD at a certain price. So Euro USD, you want to buy at, I'm going to try to keep this simple, right? And you want to buy, or you want to open 2 positions using this as your lot size, right? So basically, this is called a mini lot, and 1 mini lot equals 10,000 units worth of currency, right? So it means basically you control 20,000 units, right? So how you're going to calculate margin with this right here, you're going to take the amount of units that you want to purchase, right? And then you're going to divide it by your leverage. And then it's going to give you your margin. So 20,000 divided by, what's your leverage? 50 will give you 400. So this 400 is your margin, right? This means for you to be able to open this trades, right? This right here, you need a minimum of 400 in your balance, right? So that's your margin, right? So we've defined this part. So using the screenshot, I had this as my balance, and the trades that I've hidden here, I needed this amount of money to be able to open them. As you can see, it's a portion of my equity. And this leads me to this next segment, which is free margin. Now, free margin is the money that's in your trading account that's available for trading. So basically how we get to your free margin is we get your equity. So it's your equity minus your margin, and then you will get your free margin. It means if I've opened a position with this, right, I'm only using this portion from my balance, and I still have this amount available to be able to open a trade, right? Hope that makes sense. And let's move on to the next segment, a segment that a lot of people don't necessarily know about, and this is your margin level. So margin level is like a barometer, and it gives you a signal for the health of your account, right? So basically, it's a ratio between the margin that you used and the equity available. And the basic rule behind that is that the higher the margin level, the more healthy your account is. Another rule says the higher your margin level, the less your chances of being stopped up or stopped out, right? The less the chances of you blowing your account, basically, the less the chances of you getting a margin call. Because if you check, especially the terms of trade of every broker, they have a minimum percentage of like margin that they like, a minimum required margin for your account to still be alive. So the farther away you are from that minimum amount, the more healthy your account is. So I'm going to write everything down. So this is all the points that I mentioned, that it's a ratio of your equity to margin represented in percentages, indicates the health of your account, the health of your account. So how do we get to this figure over here? Basically, what we're saying is equity divided by margin, right? And then you take that figure, you multiply it by 100. And that's your margin level. So yes, guys, this is all I had for you guys. This is what I wanted to explain, in addition to what we talked about, right? In the next video, in the coming videos, we're going to be talking about like optimizing your risk management strategy. So this is why I needed you guys to understand concepts of leverage, concepts of like margin. And that's why I also needed you guys to understand the basic idea behind the trading plan. So if we're going to set like a maximum drawdown, or if you're going to plan for the lot sizes that you're going to use for the size of account, how are you going to go about actually deciding how to position or which position sizes you need to use for your account, right? Also, that's why I needed to also use like that video that I uploaded on like the ultimate guide to risk management. So all of these videos, you need to, like all these concepts you need to have in your bag, because once I introduce you guys to my strategy, and hopefully I'm going to be able to like open an account and trade it live so that you guys can see everything from how I grow an account and my understanding and my approach to the market in terms of risk management. Because believe it or not, most of the people who lose in the market are not losing because they're bad traders. They're not losing because they're bad at analyzing. They lose because they don't understand the basic principles or the basic idea behind risk management. And I understand that these concepts are not necessarily exciting. And I'm not doing these for views, but I'm doing these for people who actually come to my channel looking for value, because I believe that's how I position myself. But anyways, I don't want to speak too much. I want to keep this video very short. If you watched till this point, thank you for subscribing. Thank you for watching. Drop a like, drop a comment, and I'll see you in another video. For now,